Thank you for joining us today for our webinar, How to Use AI to Create a Portfolio Hedging Strategy. I'd like to begin by introducing our speaker. Porter Fraker has over 15 years of sales experience in the financial services industry. Prior to joining Boosted.ai, Porter was a managing director on the institutional equity sales desk at Evercore ISI New York, where he spent 7 years developing, improving, and maintaining hedge fund and mutual fund relationships, focusing on fundamental equities, macroeconomics, equity capital markets, and derivatives products. He began his career at Morgan Stanley in 2005. Prior to Evercore, Porter was a senior salesperson at Susquehanna International Group and Bank of America. He graduated from Trinity College in 2004 with a BA in economics. From here, I'll let Porter take away and talk about the topic for the day.
Thanks, SK, and thanks everyone for joining us today. Again, Porter Fraker, Managing Director in Sales here at Boosted.ai. Super excited to walk through our newest product, Hedging Baskets, with you. Definitely a topical conversation given the market environment, all the volatility that's going on, and definitely getting a ton of questions around hedging from our clients. So I'm excited to dive in here. Quick high level on the firm itself. Boosted.ai is a proprietary finance-specific machine learning platform with the goal to be able to easily integrate machine learning techniques into your investment process, with the goal of being able to augment idea generation, portfolio construction, risk management, and obviously hedging. And the mantra here is humans plus machines are the future of asset management. And again, the goal here is to be able to combine our clients' capital markets expertise with our proprietary machine learning algos, and really to be able to deliver outperformance or greatly improve the research process, or really try to find ideas in any market environment. On Hedge Baskets specifically, we're looking to be able to bring this process in-house for our clients, allow them to build intelligent, back-tested, and alpha generative hedging solutions, leveraging our machine learning technology to be able to think about correlation a little bit differently, allow our clients to own the basket making process, allow them to back test, test a bunch of different scenarios all at the same time, and be able to evaluate that performance before putting a trade on. And then again, thinking about alpha generation, not only being able to mitigate risk, but at the same time, maximizing your return. And why did we build the platform? And it really came down to our clients over the past year and a half. We've done a lot of meetings with clients, and this question kept coming up. The ease of use they found using our Boosted Insights platform. They were trying to think about hedging a little bit differently. And said, so can we use your machine learning technology to try to solve for basket strategies, hedging strategies? And so after surveying them, current methods were shorting similar low quality names, maybe using a broad index or index futures, simple beta hedges, third-party constructed baskets. And the issues that they were bringing up to us were, sometimes these strategies can be opaque, they can be expensive, time consuming if you're trying to build these on your own. If you are getting third-party baskets, they could be generic, which could lead to positions being overcrowded and not proven. So a lot of our clients won't have the technology to be able to back test a strategy before they start putting these trades on. So with all this in mind, we really wanted to come up with a solution that was transparent, easy to use with quick results, highly customizable. So really, again, allowing our clients to own that process. Think about, how many stocks they want in their baskets. Do they want to use portfolio optimization? Different ways of thinking about correlation. And then also think about liquidity. And we partnered with a company called S3 Partners, a leading alternative data company in terms of focusing on short interest, liquidity, crowding. And the reason we partnered with them was not only to have this platform be able to service these ideas, but really make the strategies be realistic. And as we're back testing, are the results realistic and am I actually going to be able to put this trade on the tape? And so partnering with S3 was huge for us because we can definitely be confident that these strategies are going to be able to be implemented in real time. And again, make it highly scalable and then focus on being able to backtest those strategies. On the slide, really just summarizing what we just walked through on the previous page, but we really want to, again, in thinking about simplicity, break this process down into 4 steps. And the first step is going to be all around your hedge selection. So whether you're thinking about hedging out a single name, a basket of longs, or even your entire portfolio, allow you to easily do that in that first step. Second step is all around stock universe selection. So what is the universe that you want to give to the machine to analyze to be able to pull out that basket from? So whether that be a broad index, maybe you have a watch list that you want to upload to the machine, maybe you want to filter down a broader universe as it pertains to that particular stock that you're looking to hedge out through market cap, liquidity, what sector it's in, what region it's in. So again, really be able to tailor that universe selection portion down for you. And then the third step, all around scenario analysis. And there's a few different things in scenario analysis. Number one, there's definitely not a perfect way to hedge every single security. So we want to be able to efficiently run multiple scenario analyses at once. So whether that be how many stocks do you want? Maybe I want a 50 stock basket or a 75 stock basket. Do I want to use a portfolio optimization technique? Do I want to think about correlation differently? So again, not doing these one at a time, but being able to run multiple scenarios at once and then allow the machine to surface up to the top which scenarios had the best performance. And again, we're focusing on ease of use here. So when we do see the results, we want to be able to, number one, see what's going to fit best for the scenario that I'm looking to solve for, and then do some quick analytics around, what are the constituents in my basket, correct point in time throughout that back-tested period, performance analysis, volatility analysis, factor analysis. So again, have at your fingertips all of these different analytical tools so you can figure out what's best for you at that particular time. And if we take a step back in terms of correlation, we wanted to think about correlation a little bit differently here and have multiple options for you to think about that correlation analysis. So we do have traditional correlation analysis in here, the mathematical calculation for correlation. Then we have some proprietary methods. Number one, in terms of pricing weight, we wanted to use our machine learning technology to be able to think about correlation a little bit differently. So what we do for price weight is take all of the pricing data available for the stocks in your custom universe. We run machine learning principal components analysis on that pricing data, and we're able to surface stocks that are moving together. So thinking about correlation as it pertains to price. And then similar process to the price weight on data weight. We're going to do that same principal components analysis on all of the non-pricing data that's available for the stocks in your universe. So think about PE ratios, price to book, EV to EBITDA, finding stocks that have similarities in terms of their ratios. Again, to think about correlation a little bit differently. And then for factor weighting, trying to find similar stocks based on their factor weights. All of these stocks are going to have a specific weighting to typical style factors, growth, momentum, value, etc. So able to surface stocks that are similar on a factor basis. And then not related to correlation, but we have these options for correlation. I think this is what really differentiates our platform as well, is we have machine learning models running in the background that are alpha ranking the stocks in your universe. So again, focusing on risk management and correlation analysis first, then we can layer in some machine learned signal. So the machine is going to favor putting stocks in the basket that it has a negative weighting on. So a bunch of different ways we can think about correlation, mitigate risk, and then think about maximizing your return at the same time. And then to dive in to correlation a little bit deeper, just wanted to highlight what's kind of going on in the background so you can get a little bit more context on that correlation analysis. So again, if I'm pulling up NVIDIA as a stock that I'm looking to look at, we have different columns here for their correlation scores. For all of the stocks, this is a Russell 1000 model, but you can pull up correlation for NVIDIA. Again, this is the traditional mathematical calculation for correlation. And then you can start to surface which stocks are the most correlated to NVIDIA. So you see AMD, Lattice, Marvell, these all make sense to me, all semiconductor stocks. So again, can quickly pull up correlation scores for that particular stock. And if we think of our proprietary pricing similarity, I can pull up NVIDIA again. Again, you see surfacing to the top here, Lattice Semiconductor, Marvell, but then you see Tesla in here, right? And Tesla on the surface might seem to be non-intuitive, but then a lot of semiconductor chips are going to go into building of Tesla cars. We have Wolfspeed, another semiconductor, or Generac Holdings, industrials company, but they're focusing on components and equipment, a lot of semiconductors that might go in there. But again, thinking about correlation a little bit differently than the traditional methods. Again, we can pull up this factor similarity. And again, NVIDIA at the top, but then you see Nike, Lululemon, AMAT, Edward Life Sciences. So this also makes sense to me in terms of factor weighting, where NVIDIA is a high growth stock, you have Nike's a high growth stock, Lululemon, etc. So it's finding these similarities in terms of multiple dimensions, and you can use these all on their own, or we can blend them together to get an overall similarity score. But thought that would add some context as we open up the tool. Because again, as we're thinking about tool itself, we wanted to really focus on simplicity, but really understand that there is a lot going on in the background here. And I'll focus on those 4 steps that I went through in the slide deck. Number 1, we come in here, we can name our hedge, looking to hedge out the risk of these securities. I'll stick with NVIDIA here, but you can type in NVIDIA, it's going to pull up the stock. If I wanted to do multiple stocks, maybe I wanted to put Apple in here as well, or Advanced Auto Parts, if that's one of them. Change the weights, add another security, or maybe I want to bring in my entire portfolio here. So if I have my portfolio linked into the system, I can pull that up, and it's going to show me here. Here's my actual portfolio. I got 86 securities in here. I'm long short. All my positions are available, and then we can run this hedge basket analysis on my entire portfolio. But for the purposes of this demo, I'm going to do it on a single stock. Focus on NVIDIA. Pull this up. Then we get into that second step of the process. The second step is all around universe selection. We have a couple presets in here, IWB, S&P 500. And as we think about universe selection, it's really giving the machine a universe of stocks to analyze and then pick out that hedge basket from. And so we have these 2 presets, or you can come in and create a custom universe. Maybe I want to focus on a specific region or an index. For example, if I pull up, say, the ACWI index, maybe I want to focus on a specific region, the EU, or maybe I'll just focus on North America. Maybe I want to focus on specific sectors here, consumer discretionary, information technology. And it's really going to filter this out and pull up your point in time universe. 208 stocks fit that. If I look through this list, I'm missing a few. Maybe I want to add a couple names here. Maybe they're from a different region, but I think that they could be interesting as it pertains to NVIDIA. So again, being able to come in here, customize exactly what you want to do. I can name this NVIDIA test for my custom universe. And then it'll pop up here in your universe selection. So again, as we're thinking about number 1, simplicity, number 2, efficiency, I have 3 universes here. It's going to allow the machine to run multiple tests on multiple universes. Once I do this, I can save it, get into the next screen. This is all around scenario analysis. And first in scenario analysis, we're going to think about baselines. So number 1, over the course of this back test, how did NVIDIA perform on its own? And then second in the baseline, we have S&P 500 as a preset. But if I wanted to bring in something that's a little bit more applicable to NVIDIA itself, maybe I want to add the cues. It's a little bit more tech heavy, so maybe I'll add the cues as what I wanted to evaluate the strategy against. And we can think about how often we want this to trade. So if we look at this, we're going to do it a monthly rebalance. We can do daily, weekly, monthly, quarterly. Again, customizable to you, the end user. We'll put that in there again. So what we're doing here is having a baseline of 100% long NVIDIA and 100% short the ETF or the index that you're looking to compare against. So we have these baselines set up, and then we come down into the basket scenarios. And again, we have a few presets in here, but again, thinking about diversification, we want to be able to run a ton of experiments at once and be able to tailor these as well. So we have a few optimization techniques. We are looking to minimize the value at risk over a year, over 2 years, looking to minimize your volatility over a year. Maybe you want to do just a simple correlation analysis where we're going to do a equal weighted basket of all the most correlated stocks to NVIDIA, or a simple factor basket that's going to look at price similarity and factor similarity only, again, creating an equal weighted stock basket for you. Maybe I want to add a scenario, but this is where the customization can come in for you as a client. Name your scenario, think about your evaluation. I want to do a 2-year back test here. How often do I want it to trade? I'm going to do this on a monthly basis. Do I want to make it sector neutral? This is where the data that we have from S3 comes into play. I want to make this actionable. So maybe I have a short interest percentage upper bound here. So I'm only going to have stocks with 0 to 7% short interest, or a borrow rate up to 10%. So again, depending on what your goals are, we can come in here and filter out stocks based on their liquidity as well. And so once we save this, we'll have all of these different scenario analyses. And then if you think about back to the last page, we have 3 universes and we have 5 scenarios. So we're going to run 15 back tests all at once. So once I'm competent in this here, I'm going to hit calculate back tests. And again, it's going to start running. It's going to take about 5 to 15 minutes to be able to put that out. I have one that's finished already. And again, as we get back in here and think about the analysis portion of it, we have these 3 baselines, right? So we can think about NVIDIA, the stock, over the past year. How is the performance of that security? Down 11% over the last month, 30% over the last 3 months, 45% over the last year. What was the volatility of the stock on its own? And then we go to baseline 1. You have the S&P 500, 100% long NVIDIA, short 100% SPY. So improved performance, dropped the volatility from 46 to 35%. And then if we look at the Qs, again, a more tech-weighted ETF, we can see that it's improving performance more, dropping volatility from 35% to 30%. So these are the baselines that I'm looking at, and then I want to see if my basket strategies are able to outperform that ETF. And we can come down here. We have those 15 scenarios, and the machine will surface to the top. We start with Sharpe ratio, which scenarios have the best Sharpe ratio. We can look at this on an absolute value, but really what we want to do is, I usually short with QQQs. Does this outperform shorting the Qs? So we can have a relative comparison here of our strategies versus the Qs. So I can see the one that rose to the top, it's outperforming the Qs in terms of Sharpe by 68 bips. It's dropped the volatility by almost 4% more. On a 1-year basis, it's actually giving you 19% higher performance than shorting the Qs, 5% over the last 3 months, 6% over the last month. So this is interesting to me. Maybe I'm looking for, the strategy that drops the volatility the most, or I can focus on Sharpe, or I want the best, 1-year return if I'm looking for more alpha. So again, quickly be able to come in here, filter these out. And then if I want to look at this particular scenario, I click on it. And then I can come down to the bottom and start to see some quick analytics behind the basket, right? So if I look at this chart to the right, we have the blue line, which is 100% long NVIDIA, 100% short your basket over the course of the last 2 years, versus the black line, 100% long NVIDIA, 100% short the Qs. So you can see, it's looking like it is outperforming. But then for some deeper analysis, and I think this is super important, to be able to quickly see the stocks that are in your basket, how it's weighting them. Do these hedges make sense for me? Are these names that I would actually trade in the portfolio? So you can start to dive into the actual constituents of the basket, and then you can do analysis at each point in time. What did it own in July of 2021? So again, being able to quickly analyze the constituents. Maybe you want to look at some factor analysis. How is it exposed to growth, size, volatility, value? So quickly be able to see, is it neutralizing some of these factors? Was that my goal? If it's not, maybe I go back into the portfolio construction portion and look to mitigate some of these factor risks more. You can see average volatility over different time periods. Again, if I'm rebalancing this once a month, I can see the volatility over the course of the back test. You can see it spiked here. Again, is this okay with me? Am I okay with that given the added performance? But again, we're just trying to be as transparent as possible and give you enough information to get comfortable with the basket scenario. Then we can look at monthly returns. And so we can see the absolute returns of the 100% long NVIDIA, 100% short the basket. We're down 25% this year, and we're up 100% last year. And if we do it relative to that Qs benchmark, we're actually outperforming the Qs by 10% this year, and we outperformed the Qs by 21% last year. So it looks like a good strategy to me. If it's something that I want to implement, I'm going to be able to upload this into a model, press play, and since this is a monthly rebalance, it's going to go through and dynamically rebalance the strategy every month, but able to service these stocks that are going to be in the basket before you put those trades on. You can go through, analyze it. Maybe you like it, maybe you don't. Maybe you want to run a different scenario. But again, our focus here at Boosted is to be able to, number one, allow you to select the stock or group of stocks to hedge, select the universe from which the machine can construct that basket, select market cap, liquidity parameters, select your time horizon. And really the goal is to bring this sophisticated technology in-house, be able to do it in this no-code, low-code environment that's super easy to use, get results quickly, and generate more custom and appropriate hedge basket ideas than some of the current methodologies that are going on today. But with that, I think I have a few minutes for questions.
Thank you so much, Porter. This was very helpful. We have a few questions. Let's get to them with the time we have at hand. First one, how are current liquidity conditions, especially in terms of financing, impacting your models?
It's a good question. And I think, as we think about hedging, no two hedges are the same. I think this brings into account our partnership with S3 Partners. I think this is definitely the reason why we wanted to do this, which was to bring their real-time data into our models and allow clients to filter out for these specific liquidity constraints or short interest constraints and allow them to incorporate them into their models.
Thank you. Drawbacks of using exchange-traded products for a hedging strategy.
Drawbacks, I guess, for using exchange-traded products. Another good question. I think that using ETFs is definitely an effective way to hedge out stocks, but I think that you can get some unnecessary risk in there if you're not really tailoring it. Again, if I go back to that NVIDIA example that I walked through, depending on the ETF you're using, you get overweighted risk to different sectors. If you're using a broad index, and they're not allowing the machine to kind of tailor or hone in on similar stocks or maybe some factor risks that are involved. So I think it's an effective way, but what we're trying to do is be able to really tailor it to our clients' specific use cases.
Thank you. Is position sizing available within the platform?
Position sizing is definitely available in the platform when you go in there and are creating the basket scenarios. You're able to give a minimum position sizing limit and a maximum position sizing limit. So if you need to stay within a band, you can definitely calculate that in there with your portfolio construction.
Thank you. Are there any live use cases? You covered some of that.
Yes. So we have live use cases. I don't have one pulled up right now, but I would encourage whoever put that question in there to reach out to SK or myself. We're happy to walk through some of these basket scenarios that we've been running for over a year. We have multiple clients that are running these scenarios live as well. But again, happy to walk through the platform one-on-one and show whoever asked the question some live experiments.
Great. How can you backtest the strategy?
Yeah, so in terms of backtesting the strategy, and I just walked through it in the demo there, we're using a 2-year backtest in that particular scenario. But how we do it is we have data partnerships with CapIQ and FactSet, again, S3 partners on the short interest data, macro data, but we have all of this data correct point in time. And we really focus on doing our back tests completely out of sample. And so when we start the back test, say in 2020, the machine is only able to see that real-time data with no concept of forward-looking data. So it's not allowed to cheat, so to speak. And so we're able to kind of run these live scenarios using that data. So again, we can make these back tests as realistic as possible.
Great. I think we have time for one more. Interested to hear how this may assist in portfolio construction processes.
Oh yeah. So today, we walked through hedging specifically, and there is some portfolio construction process embedded in creating those baskets. But in our Boosted Insights main platform, we do work with clients on portfolio construction techniques. So we have 2 steps to that main product is number 1, signal generation, and number 2 is portfolio construction. So we do work with clients on building portfolios using our proprietary optimization techniques, using our proprietary risk model, and some traditional risk models as well. So in our main platform, we can definitely do some portfolio construction with clients too.
Wonderful. With that, we are right on time. Porter, thank you again for doing a wonderful presentation and taking the time.